Punita, fantastic to have you back and thank you for joining us. Punita, the headline news for India has been nothing short of disappointing on the economy front, on the earnings front, and also on the macro front. Yet we are all set to close the year with a record high. Is it only about flows? And do you think rather than focusing too much on what is going to happen to GDP, earnings, and macros, should we only focus on liquidity? Because that's what seems to be doing the magic trick. I mean, it's a one-trick pony. When money is coming, we are going higher. When money is moving out, we are going lower.
Good morning, Nikunj. Yes, flows actually have been quite, have turned positive. I think what we need to keep in mind is that flows to emerging markets have finally improved and are turning positive, but most of it is going to ETFs and not to fundamentally driven funds. But I think that will also change because I do believe that the US markets are at all-time highs. I don't think that the valuations are particularly attractive. And the growth is also getting compressed. So I think a lot of the valuations are better in emerging markets and in some other international markets. So I suspect that these flows will quickly turn into maybe looking for good fundamental value buys as well.
Just want to mark what the market as well is up to. It's a quiet start, but it's good to see that the breath is actually open in the positive. And just look at the names that are actually holding up. Page Industries for a second consecutive day after that 5.25% move that it saw on Friday. Today as well, it's seeing a smart follow through about almost 1.5% up in the green even as we speak. And PVR, that's your big mover today, 1.6% higher. For PVR, there's also an Adani Port, Sun Pharma, Idea. These are names which are gaining traction. On the flip side, we were chatting about Yes Bank and the clock ticking just 24 hours for them to deliver on the promised fundraising before the calendar year gets done. And Yes Bank has fallen a solid 3.5% as we speak right now. So that's really the texture of the market as we speak. But Punita, just on the subject of Chris Wood's latest note, his Greed and Fear note, which actually says that, Greed and Fear has been a supporter of Prime Minister Modi's structural reforms, though they have clearly had a shock effect on the economy. He's talking about the protests with regards to CAA, and he's saying while the above issue may not quite have a direct impact on the stock market unless there is a complete breakdown of law and order, but he's saying that they do involve a distraction that the Modi government could well do without, given the economic challenges it's currently facing, having embarked on such root and branch structural reforms. Do you as well believe that the government is digressing at this juncture? And if they really want to focus on what's really happening on the economy, they could very well do so?
I think the government is focusing on the economy. In fact, the budget is going to be coming up in about a month. And I think they're definitely very, very aware of the fact that the economy is slowing down and that a lot needs to be done. So I think there could be some bold moves. And like we've seen in the last few months, we could see some more positive moves to stimulate the economy. And so while yes, this is a distraction, we're seeing the same kind of protests in Hong Kong as well, but that hasn't stopped the Hong Kong and the China equity market from performing well. It hasn't, stopped from the trade deal with the US phase 1 to happen. So I think the economic momentum is going to continue in terms of whatever the government needs to do. But yes, these kind of things create some fear and some anxiety amongst those who don't know the Indian economy well and who are looking at it from a distance. So that obviously might slow a little bit of the flows, but I think we should look forward to what might happen in the budget.
What do you really think, Punita, the government can do at this juncture to try and prop up the economic distress that we are in? There is talk about income tax actually getting reduced and the slabs being changed overall. But purely from a reform perspective, what would you say is the need of the hour that the government can announce in the next 1 month?
Well, I think there are lots of things that the government can do. Not all of it can come in the budget, obviously, because those are, as I said, they're structural reforms that that require not just an announcement, but patient delivery and execution as well. So we have to look at it over the whole year. But definitely, I think there, we have both a balance sheet pain in terms of the slowdown as well as the demand compression. So we have both of these areas under pressure, and the demand can only be improved by actually maybe potentially cutting income tax rates or giving some incentives to sectors that are really in pain, like the real estate, autos, etc. On the balance sheet side, the government has taken some moves. The banks are beginning, their NPA situation is finally, turning around, and we are seeing some potential tick up, and the government did, do corporate tax cuts to improve the health of the corporate sector. But obviously that I don't think had as much of an impact, because a lot of the corporates were already below the 25%. But it definitely had some incremental impact.
Okay. Just to sort of play devil's advocate, Punita, but what really gives you the conviction that some of those measures will kick in, let's say, in the first half of the next year? Because from what we're hearing currently, the slowdown may actually, further lead to, companies struggling to see that catch up on the earnings front. And we haven't really seen any of that come in. We've seen companies deleverage, we've seen them consolidate, cut costs, but we haven't yet seen any boost in earnings.
Well, two things. One, if you look at metals and commodities globally, they're a leading indicator generally of a health of an economic recovery or strength. So we're seeing in the metal stocks and others perform well. They are giving some kind of an indication that globally there is going to be hopefully some improvement, because we are in an environment globally of very loose monetary as well as fiscal policy. In India, we've trying to have a looser monetary policy and a fiscal looser policy, but of course then the fiscal deficit numbers might exceed what the targets have been. But I think globally the environment is fairly benign. And so if the global economy chugs along reasonably well, we will see some of that impact in India as well. Now, yes, India has gone into a downturn. Companies have laid off people, so unemployment is rising, and everybody's feeling the pain. I think the government is aware of the fact that along with the social issues, if the economic issues are not resolved, the things can get really, really bad. So they really do need to address the economic issues quite dramatically, and they're trying. And even every day you hear of the finance minister meeting industry people. Today, I read that they're meeting the public sector banks as well. So there is an evaluation going on and a realization that things have to be done. So I'm hoping that things will be done.
We were just looking at the back data of 2019. What has outperformed all asset classes has been, surprise, surprise, crude. What comes a close second is actually gold, because of this entire risk-averse geopolitical tensions. People are sort of moving to safer havens, and gold has been seeing a fair amount of buying. As we speak, silver is giving you a breakout on the charts. And if you just look at the Nifty, that's only given you a gain of about 13%. And we all know that it's a clutch of those 10-odd stocks which have actually held out. Even if we were to take a look at the US markets, it's largely the FANG names which have participated in the move, taking the Dow all the way to an all-time high. Just looking forward and crystal gazing into the new year, do you think this trend would remain intact, or do you think the move in equity markets is going to sort of broaden?
I think it will broaden. In fact, Aisha, in the US, the market breadth has actually been quite good. So it isn't just restricted to the FANG stocks. In fact, over the last quarter, we've seen healthcare and pharmaceuticals start to perform. And I was looking at the data in India too. We're beginning to see a little bit of that happening in India as well. We're seeing pharmaceuticals and some of the other laggards beginning to perform. The breadth has improved over the last quarter. In fact, if you remember my last interview with you, I think a couple of months ago, I did say that we should be on a risk-on mode. We would see markets recovering, and we have seen markets recovering. I think I would be more concerned about the US equity markets, but with Brexit having been resolved, with the US-China trade phase one kind of some resolution, with the budget coming up in India, hopefully more positive news to come from there. Again, hopefully nobody knows we don't have a crystal ball, so we're all sort of guessing. And I think valuations in India and some of the emerging markets are still way more attractive compared to US and some of the other developed markets, and particularly in mid and small caps. So I see the breadth as a result improving, because people and smart money is going to look for ideas outside just the standard US and other developed market names. And in India too, the high quality names are already have performed to some extent. So you have to look beyond that. And if the economic growth environment is benign, then I think equity markets could still do well. Of course, I can't predict what happens through the full year, but I'm just talking over the next few months. I think we will see what we've seen over the last month or two, that kind of trend to somehow continue, and more money flowing into EM and more money flowing into some of the riskier mid-cap sort of names where there's value and quality.
I just want to take a slight deviation and talk about the FMCG index. And frankly, 10 years, that's a long time to tell you that where the index has moved and which subcategory or the sub-index has given great returns. And this decade really belongs to the Indian consumers, whether it's retail-dominated banks like Kotak Mahindra, HDFC, retail-dominated franchise like Jubilant Foodwork, or companies like HUL. The FMCG index from 2014 is up 50%. But if you stretch it more, we go back to the beginning of the year when we were recovering from a financial crisis. The FMCG index has given you exceptionally strong return. Within that, the outlier has been Jubilant Foodworks. So instant gratification, I think, really has been the biggest change, whether it's using a smartphone or eating pizza and getting instant gratification. Jubilant Foodworks, in last 10 years, this is a 5-year return. In last 10 years, Jubilant Foodworks has given you a return of more than 17x. Punita, this decade in a sense really belonged to the Indian consumers, retail banks, retail NBFCs, pizza companies, PVR, a stock which you own. Do you think this trend will continue into the next decade as well, next 5 years? Are Indian consumer names on course to give good returns?
Well, Indian consumer is a very important part of the Indian economy. And so I think the demographics of India support the fact that we have a very young population and much more millennials coming into the workforce, and also an aspirational younger population. So I think the consumer story in India is very core to the economic growth and is likely to continue. And now talking about Jubilant, while you're seeing Jubilant Food doing really well here, if you look at similar franchises globally, you look at Yum China, and that, here we have obviously Domino's through Jubilant, but there's Pizza Hut through Yum, and some of the other similar kind of franchises have also, the stocks have done actually very well in other markets where they are listed. So it is not isolated to India, for instance, this particular theme, but it's across the world. So, and of course, the Indian consumer continuing to be a very important part of what we see in terms of the demographic changes going forward in the Indian economy. I think this theme, you have to, it's here to stay. There are many other ways to play it, obviously not just consumer, not just food, so it's consumer discretionary, consumer durables, financials are an important part of the India consumer story as well, as you yourself have said. So there are many ways to play this Indian consumption theme. And that's the good part of the Indian stock market. We have lots of listed names across lots of sectors.
Causing the itchy throat? Is it excessive year-end partying, or is it the Delhi cold, or is it the Delhi pollution?
I think it's a little bit of everything, but of course the weather and the Delhi pollution isn't helping.
Yeah, absolutely. I believe it's really bad today, the fog.
Actually, I have to give you this temperature that I looked at, and since I spent still a lot of time in Boston, 2 days ago the temperature in Delhi was colder than in Boston, and this is Boston winter, so you know how cold it is.
Ouch. You know, I won't be surprised if in a few years from now we're going to be hearing of snow in Delhi.
You know, Paris was 44 degrees in summer.
Yeah.
Delhi is 9 degrees in winter.
Something's going on.
So something is going on. No, 8, 9 degrees on an average.
And we're not even in Jan yet.
You know,
Jan is colder in Delhi.
But there's one thing which I just refuse to understand is that decades change, disruption has happened, but why do we trade on 1st of Jan? Punita, nobody hears us out. Why don't you use this forum as a pitch? We take a lot of pride in saying that we are in a global economy. We've gone, we need to trade in par with the global best practices. Decades have gone, disruptions have happened, we moved to smartphone, but we still trade on 1st of Jan.
Well, not just that. We still have offices open on 24th, right before Christmas. So, and schools are open as well. So I guess India is busy while the rest of the world is partying.
Well, happy parting. That's what we would say. Thank you for joining us, and certainly hope to see much more of you going forward in the year 2020.
Thank you. Thank you. And Happy New Year to all the viewers and to all of you.